Join us now with What to Expect is Cynthia Littleton, Variety co-editor-in-chief. Cynthia, I don't want to turn you into a stock market pundit, but how much of what we've seen in terms of the Disney rebound this year is just overall better market sentiment versus progress being made somehow in figuring out streaming and what the end game is? Because we thought Disney had it. We thought they knew exactly how to do it. And then all of a sudden we said, oh, my God, they have no idea how to make money doing this. So now where are we?
Well, that whole making money part was definitely became clear in their last quarterly earnings report. I think it will be really interesting to see the commentary. I think with today's earnings call, the commentary in the conference call is probably where you're going to get the most of the news and the sentiment. I think the stock is up in general, like most media stocks after a really horrible 2022, is because you've seen CEOs and CFOs out there talking more sensibly about what they can spend, what the realistic growth trajectory is, what realistic prices are going to have to be for some of these services. I wrote a cover story a couple of weeks ago about how the industry is so far from the good old days of cable economics. The good old fashioned cable industry we're still back to that dilemma of trading analog dollars for digital pennies. And you've heard a lot more sober conversation from CEOs, and I think that is what Wall Street is responding to.
Yeah, I can't figure it out. I like that expression and digital pennies, but I think we can at least say that the entire world's not just going to cut their cord and go to streaming. And I guess the demise of even network television. It happens slowly, and the demise of AM and FM radio. Suddenly, I still see those stocks trading. So any of these things that you write off too quickly, I don't know if you can just make these definitive statements. Let's talk what we can talk about. What are they going to do with Hulu? What about Nelson Peltz? What about what are they going to do with ESPN?
It is. I mean, they have a high-class problem. They've got an abundance of assets. I think it'll be very interesting to see the growth trajectory for both Disney Plus and ESPN Plus in the numbers that are disclosed later today. ESPN really seems like ESPN and Hulu are the really big question marks hanging over Iger. With ESPN, the day that ESPN goes totally over the top is the day that the forecasts show that the old world of pay TV, cable, and satellite, that is plateauing below 40 million, 50 million, 40 million people. That's when you'll know, because ESPN and CNN and the few pillars of the cable business are the things holding together the old linear bundle. Bob Iger hasn't gone there. Bob Chapek didn't go there. So I think that's really a bellwether for where that stands.
Right. And then
I think Hulu, as you know, is wrapped up. The future of Hulu is wrapped up in the question with your parent company of Comcast. And I think it is very hard to predict exactly what's going to go on there. But Hulu is a real question because Hulu is a very big asset, but it also requires a lot of spending, content spending.
All of those, yeah.
It takes a lot to be a prestige player in the scripted business right now. And I think everybody from the mighty Disney on down is really looking at these numbers, the content spending. Even Netflix on their call talked about they are looking at they are on the downside of these just eye-popping content spending numbers.